one of the aspects we look at before we take on a project is logistics, access to seaports, because if you're in porphyry coppers, you need access to a seaport or a railhead.
Hey, Elmer, how are you doing today?
Doing very well. Thank you very much. It's good to be back to talk to you once again, Gilbert.
Sure. Yeah, it's been a year since we last chatted in the last PDAC. Maybe you can just refresh some of the audience memories by giving us a bit of a background of Copper Fox.
Yeah. Copper Fox is a North America focused copper exploration company. We have a portfolio of projects in two of the proven mining districts in North America, in Northwest British Columbia and the Laramide province of Arizona. Our strategy is essentially to acquire exploration stage or unrecognized or underexplored exploration stage projects, focusing only on porphyry copper systems and or ISCR copper systems, and taking those and doing the exploration work to advance them if with technical success to the advanced stage, at which point in time when fair value is created, the board will make a decision as to how they want to dispose of the asset.
Good to know. So just let's talk about your project here. Your recent update on Schaft Creek JV indicates that you're doing a new PDA. So what's the other one you want to do in terms of updating this and the new PDA? What do you want to achieve in your project?
The last technical report that was filed on Schaft Creek was a feasibility study that was done in 2013, early 2013. That was done at a time in the market where we had high capital costs, high operating costs, low foreign exchange. Since Teck backed in to the project in 2013 through their back-end right, we formed the Schaft Creek Joint Venture, and Teck assumed operatorship. And Gilbert, as we know, in these large projects where it was designed at 133,000 tons a day, you need a major to actually take a project of this scope and scale to move it forward. So when Teck became involved as operator, they looked at all the components of the feasibility study. They went in and they did some drilling. We did some optimization work. We did rethink of the mine plan. We took a look at the infrastructure. We took a look at the access options, the hydroelectrical power options. And essentially that work over the last 2 or 3 years culminated in a change in the footprint of the project. Because there's a change in the footprint of the project, we want to put out an updated technical report. Because of the need to acquire some technical information in some new areas, geotechnical information in new areas, we are going to put out a preliminary economic assessment. And then that's about what we can do under the requirements of National Instrument 43-101. We're very happy with that because it's going to be a very robust PEA. But essentially what it will do, it'll provide an update to the end of December 2020 as to the advances made on the project, not only from a project design standpoint or what the project looks like, but it will also take into account updated operating costs, updated capital costs, and what the project, how the joint venture envisages the project going forward. So I think it'll be a good update, and I think I'm looking forward to getting it done, getting it out, and I think the community at large will hopefully like the results of the study.
Sure, we're all looking forward to that. So you also have some exciting projects in Arizona. So let's talk about your recent PDA that you filed with your friend Dyke deposit here in Arizona. So can you tell us a bit more details on how the report goes?
Yes, Ben, we released the results of that study on the, I believe, 12th of January, 2021. Basically, the study showed a 4-fold increase in the project valuation from 149 million after-tax valuation in 2015 at an 8% discount rate to 645 million US dollars after tax at a 7.5% discount rate. Those increase in value is essentially fourfold increase in value, And that is essentially a result of some work we did in 2018, 2019. And then it was remodeling an analytical program, rethinking the project, relooking at the metallurgical responses and the copper recoveries. So when we put it all together, that culminated in us completing an updated 43-101 resource estimate in May of 2020, where we were able to upgrade some of the inferred resources into the indicated category as well. So we looked at that, we went ahead and we did the preliminary economic assessment. That was done very conservatively. It was modeled after the other ISCR copper projects in Arizona. It was very exciting and actually found the end result was quite surprising. We looked at it several times to make certain that the numbers were accurate, and we're very pleased with the engineering firm that did the work for us. And so the issue now is we've got to file that technical report, which we're hoping to do today on CDAR. And then the board is going to look at the results. They're going to make a decision and see what will be the next steps. So we'll look forward to news releases coming hopefully soon about what the next steps we're going to be taking at Van Dyke. But overall, extremely pleased with the way that project has advanced on the valuation scale. 2015, it was probably a little small on value for people, but longer mine life, better copper recoveries, significantly higher post-tax valuation. So now it's becoming more of a significant project in the ISCR space in Arizona.
So you're now spending quite a bit of effort in exploring developing copper projects over there in Arizona. So how do you find it working there compared to other places like BC or other places in the world?
We particularly like Arizona because it's commonly referred to as the Laramide Age Copper Province or Southwest U.S. Copper Province. There's some of the largest porphyry copper systems in the world located in that copper province. We're actually fortunate to have 3 projects there now. In comparison to the other area where we have projects in Northwest British Columbia, where we have the Schaft Creek Joint Venture with Teck, it's totally different. I mean, down in Arizona, yes, you do have some hills. I would call them hills. They may call them mountains. In northern British Columbia, we have mountains. And the access is a lot easier in Arizona. The infrastructure is a lot easier. The understanding, Arizona has been a mining state. I think probably one of the reasons why Arizona became a state because of the historical mineral discoveries they made back in when the settlers were moving to the west. So it's a good state to work in. The legislation is good. It's a pro mining state, much like British Columbia. It's just more logistics and access. And the regulatory regimes are pretty much the same. You do have both state and federal regimes in Arizona. You have provincial and federal regimes in Canada, and but all our projects, anyone we would look at, we have one of the aspects we look at before we take on a project is logistics, access to seaports. Because if you're in porphyry coppers, you need access to a seaport or a railhead. If you're in porphyry coppers, you need access to a large amount of hydroelectricity power. And the reason why we like hydro is because it's low carbon content. It's almost carbon neutral from that point of view. And where the industry is going, that's a very important part. So we don't see there are operating difficulties, but from my mind, they're certainly all of the obstacles that people would think there'd be out there. They're all manageable.
Great. Certainly quite a very safe jurisdiction compared to other parts of the world too. So let's talk about share price. Recently you have this quite a bit of a good one there. And can you tell us any particular reasons why your share performance has been doing quite well recently?
Well, probably more, it's likely that the price of copper has gone up, and as the old saying goes, a rising tide will lift all boats. But the thing is, the narrative pretty much now, as you see it, is a lot of the governments are talking about a reopening. They're talking about a green economy. They're talking about green initiatives. We're talking about electrification of cars. We're talking about smart cities. We're talking about rebuilding infrastructure. They're talking about the health benefits of using copper not only in surfaces or copper infused surfaces like desktops, and it's very effective in killing bacteria and viruses and things like that. So that's the narrative. And a lot of people are saying, well, the price of copper is going up. The demand side is definitely there. That's the narrative on the demand side. It's the supply side. And I have been talking about issues, supply side, for probably the last year and a half or 2 years in our financial disclosure. There are fundamental issues inside the copper industry which are going to be hampering the supply side. And unless we can get that in balance, and it looks like it'll be okay for probably through 2021, possibly 2022, but in 2023, we're starting to see where the supply tends to start dipping off significantly. And that's when the demand curve is looking like it's going to take off in the opposite direction. So it's going to exacerbate the issue about where we're going to get a supply of copper. And clearly, higher prices will help that demand because it will change the economics of certain mines that are currently in existence. And also, if you look at going forward, the price of copper will be dependent on, like I've been saying, supply, but in the projections by international copper study groups and the major producers, there's a significant number of mines that could go out of production by the year 2035. That's the case. We've got to replace these mines. The issue is permitting. Permitting a project and getting them built. Typically, a build for a large project is 5 years. Permitting is probably 2 to 3. So it's an 8-year hiatus from the time you sanction it to the time you actually get the first ton of conduit at the front door. That's a significantly long time in the mining industry. That's also helping. And but I think, for our share price point of view, I think it's based on the strength of the projected future price of copper. I think it's also based on the fact that we have a very good joint venture with a major operator on our major project in northern British Columbia. And we have a joint venture there, which is very good for Copper Fox, where the obligations have primarily all been taken on by Teck. And we also have another advanced stage project. So, we've got some very high implied net present value in both those projects. And then we also offer the opportunity of exploration discovery. So when it boils down to it, there's a lot of copper exploration companies out there, but there's a smaller number of them that actually have resources on the books. And I think it's the companies that's got resources on the books and got active projects, active joint ventures. That's where you're going to see the value appreciation over the next 1 to 2 years.
Great to hear. So do you think copper price will break through the all-time high price that was achieved about 10 years ago? What do you think?
Well, I've been through commodity cycles since the early 1980s. And, copper is going up and I've seen the cycles, but given the narrative, what I'm seeing right now, I'm looking at a lot longer commodity cycle. I'm not going to call it a super cycle or whatever, things like that. But, 2 days ago, copper was trading at $4.33 a pound. Today, I think it's $4.17 a pound. That's what is that, a 15-cent spread in 2 or 3 days? And so, the spot price there will be some frothiness in the copper price going forward. But I think overall, the price of copper it's got to go higher, and then it has to go lower. So I had to call a price. I said, I don't know whether we'll get by a long-term higher price, because the highest copper price I remember seeing was $4.41 US a pound. Can it get through there? Yes, I think it can. I think it can breach that point. What will it be over the long term? That's kind of hard to project, because I've seen in copper people are projecting $5 a pound, $6 a pound. And, we all in the space hope they're right, but I've been through it before. I've seen projections before. I've seen things come up. I've seen things go down. So basically, we'll continue to be a conservative company using long-term metal prices, long-term foreign exchanges when we do economics or anything we do related to our projects.
So in summary, so what do you think, why should investors keep following Copper Fox for the next 12 months?
Copper Fox is a value play. Like I said before, we have 2 advanced stage projects. That means we have resources, established resources at various classifications on 2 of our projects. We have independent 43-101 reports on those 2 projects. They have established a net present value and an internal rate of return on those 2 projects. In addition to that, we also have 2 very, what I would call good quality, high quality porphyry copper targets in Arizona, which we own 100%, and one of which is at the drill ready stage, and the other one is probably at the target identification stage, i.e. we need to do some geophysics. We're also in the process of doing an acquisition in British Columbia to reestablish our presence in British Columbia as an explorer outside the Schaft Creek Joint Venture. So when you look at what Copper Fox offers, vis-a-vis, and there's a number of companies like Copper Fox out there, but if you look at what Copper Fox offers in terms of the overall categories where people have a copper exploration target, or they're planning a drilling program, or they have one drill hole or a mineralized discovery, all of which is important and part of the industry. But when you look at the group of companies that has established resources already on the book, so to speak, that's where the value play is. That's where the value should come, with increasing copper prices and increasing demand for copper, because we are so much further ahead of a lot of the other companies out there. So that's why I say it's a value play. And given what the resources we have in the books, I would say it's a fairly low risk value play.
Great to hear. So thank you, Elmer, for sharing your insights with us here today.
Gilbert, it was a pleasure. Take care.
Yeah.
Have a great day.
Again, thank you for joining us for this PDAC special coverage series. So we'll speak until next time. Thank you, Elmer.
Thank you very much.